Okay, so guys, we have this setup here on gold. I've been holding it for some time now, and if you realize, we have some equal lows here. We have what they call equal low liquidity. Okay, so price hasn't yet like swept this liquidity here. Okay, but now why did I enter my buys at that area? I realized something very crucial. When price protects liquidity, what they call a liquidity protection, is simpler when we have so price is making here, as you can see, something like this, then it pushes up. This is what they call protected liquidity. When you have protected liquidity, you don't have to go against the market, because in most of the cases price will continue running up until it hits a major liquidity zone. For instance, at this point, if you guys can observe, we had a market structure break. Okay, so after price has reached this level, now we expect some sales to clear even all that liquidity down there. Okay, so now once you have this in mind, you don't have to like waste lots of your time trying to, for instance, for me, what I was trading earlier before, I was trying to like get this supply zone, and then I was just trying to short the market to clear all this liquidity down here. What I didn't know is that price had not yet made clear the liquidity at the top, because that's the most important liquidity, the higher high. Okay, once price clears this level, then we may have some potential reversals to clear all the liquidity underneath this zone. But now for that to happen, it may take some other time. Okay, so what I have realized the most, and the most important thing that I've realized over time, is that you don't have to go against liquidity. You don't have to go against it, because here you may be like, the first area here, once I saw this liquidity swept, I was like, price could potentially clear all this liquidity and then we should have a push upwards. Sometimes market doesn't even do any of that. Okay, sometimes market just clears some liquidity, then we push higher. Okay, so we have to keep that in mind. We have to just keep that in mind. You have to be flexible at this point. So anyways, I took this buys, which I'm going to be closing very soon, and yeah, I think I shall just now start closing some of the positions. This is MT4, for those of you wondering. So from 200 we are now in 1k, but let's first close the closest positions. That's how I like it. Okay, so I've closed one position, the second, and then the third. Why am I doing this? Because I'm expecting some sales very soon. Okay, I'm expecting sales very soon. Now that price has made a new higher high, I'm expecting sales. And if you guys can observe here, we have a supply zone on the H4, which price would likely respect. Okay, price will likely respect this supply zone. We have a supply zone which is in the same line with the what? We had a drop based drop along that area, so I'm expecting another drop in price at that level. Okay, because we have cleared most of the liquidity, and also now we're expecting price to come and clear the liquidity in form of the equal lows. These are the equal lows that I'm talking about. So price may come and clear this liquidity here down, and this setup may take some few days, but let me first close and show you what I mean. Okay, let me first close and show you what I mean. Okay, so let's close this position, and then I shall enter in my sales. Okay, I shall enter in my sales, because I'm expecting that price will respect the first supply zone above, and then we shall continue lower. That's my expectation. But above all, what I've realized the most is that price may have the potential to first of all push just a little bit above that supply zone, just to kick some people out. So I've used the small lots. That's only 0.1 something, but I'll enter in more sales once price clears some liquidity above these levels.